Welcome back to the Rebel's Edge. We talk about Goldilocks a lot and whether it's too hot or too cold. Well, sometimes it's just right. And today, it wasn't just right. We'll have the 411 on what was going on with the employment data right after this. Bang!
Here we go. Oh, boy, I didn't know you brought that along. All right.
Yep.
It is official,
Brought it along,
isn't it,
Pete.
now?
We're out here in Vegas, folks. Pete and
Yep.
I are keynoting later today. And it's the Traders Expo Money Show combination. We're going to have Charles Payne out here and a whole bunch of interesting folks that they gather a really nice crowd for at the Paris Hotel and Casino. And so to Kim and all the folks at the Money Show, thank you, Michael. But you know what, Pete? We got an employment report today, and the employment report showed that people just aren't getting hired as fast. So that might mean that the Fed is more likely to move because, of course, if people are starting to struggle to get hired, then that part of that Goldilocks equation means that, well, that's bad news, but it's good news because it means they're gonna cut rates. And some people even think maybe 50 basis points on the table. I am not one of those people, Pete. How about you?
Well, they keep kicking that around. I'm with you, John. Quarter point makes the most sense. I mean, I'm not sure that they're totally in on the idea of the cut. I think that most of them are, but the one thing I think that stands out is if it's a quarter point, it's a lot easier for the ones that are kind of still on the outside of this whole thing. I would say this, the ISM number also, John, U.S. manufacturing, that number came out, looked like it was contraction. That didn't look all that great. And I think we're looking at a market that we maybe are starting to hit at least the early morning lows, because as you and I were coming on here, we were talking about the fact that we're starting to see it maybe get off of those lows a little bit. But for right now, down 400, 450, 500, whatever it might be on the Dow, they are putting some pressure on the market and the NASDAQ as well.
Indeed. And folks, as far as macro today, the macro minute, jobless claims, a yearly high for those jobless claims that we just described. And we've also got that softening, which indicates the Fed may be lowering rates, but it'll depend a lot also, Pete, the market's direction on Apple and Amazon, because we've got the Meta earnings and they were solid. But Apple and Amazon, well, that's another story. They come after the bell.
That I think is going to be market moving almost to the effects of what we have seen already, John, coming from all of what's been over the Fed over the last couple of days. I mean, this movement that we'd seen there, a lot of the questions, almost everybody's question had to do with cuts and everything else, and when and what would it take to get them and all of that. I thought Powell danced around that pretty good, but I think the next thing, absolutely, it's Apple, it's Amazon. What are they going to tell us? We already heard from Meta. Meta was pretty phenomenal, but I think that Apple had been struggling, obviously, some of the sales for phones and all the rest of it. And obviously, we're not that far away from the usual launch, usually in September, for something new from Apple outside of the iPads and all the rest of it. So I think between Apple and Amazon, that's a pretty good catalyst.
Yeah, it will be. And obviously, the Prime Day is not going to be in these numbers, though, Pete, even though many of you remember, of course, it's just over a week ago. But that's not part of this quarterly result. That'll be part of next quarterly result. Mm-hmm. So anyway, Pete, as far as fantastic futures, I'm going to say the 10-year breaking down through 4. That is the fantastic future that I'm going to address today. I'm sure you've got VIX on your mind as well as that 10-year. Which one are you going to talk about?
I want to do both.
Okay.
I think it's that important, and I still got 43 seconds. So here's what I got to say. That 10-year down 3%, underneath 4, that's a big move, John. I mean, it wasn't too long ago at all. We're talking about just a few weeks ago where we were at up, 4.6 or 4.62 or whatever it was. It was significant. That was a pretty good jump. And now all of a sudden we've just been coming down. Post everything yesterday, dropped all the way down today, now under 4%. On top of that, I would just say this about the volatility index. Pay attention to it. And that 15 to 19 range that we've been talking about ever since it broke away from the 12s where it was for a month and a half. Well, where are we sitting right now? Well, we're looking at a 1750, smack dab in the middle. And keep an eye on that. It's going to be telling, especially as we're getting closer towards the weekend.
Well, what about Meta, Pete? Meta came out with earnings and the stock exploded. It opened at 520. It went all the way to 527 and change, and then reversed. Didn't go negative. It's still up 7%. But the strong second quarter earnings of whatever, 516 a share, about 9% better than the street was looking for. That's good. That's the bottom line number. The revenue number was $39 billion, Pete. So for all of us that are on Instagram or WhatsApp or any of the so-called Facebook legacy platforms, revenue streams very, very strong. And that's why Meta has been strong. Double normal turnover so far today, Pete.
Remember all the criticisms of what he was doing and how he was doing it and how he wanted to move here, John, and pivot there. And now I think there's a lot of crow to be eaten by a lot of folks because all they've done is crush it. You just mentioned that $39 billion number under the revenue. I'd say that's not so bad. By the way, up 22% year over year. That sounds like pretty good growth for somebody that's already had pretty good growth. They're doing everything right. They absolutely destroyed the numbers when you look at the earnings itself. You couldn't have crushed it any better than they did. And yet, John, their forward PE is 24. So all of what we were saying on the positive side, and yet it's still an inexpensive stock. I think that's why it popped to where it was before this pullback that we are seeing right now. How about this? Free cash flow, $31 billion. I would say they are doing just about everything right. The execution has been absolutely fantastic. And as you had told me earlier today, we've got Goldman Sachs and Oppenheimer out there saying, you know what? We need to lift up these price targets because we didn't realize how damn good these guys were going to be. And he delivered better than I've ever seen.
Yep, it was a strong quarter for sure, folks. And keep an eye because Pete said, that we may have bottomed temporarily or otherwise this morning, right around what, Pete? About 40,350, right around that level. And so far, that's been holding. It'll be key into the close, and it'll depend on, of course, those two stocks we talked about, Apple and Amazon, whether people get more bulled up about it or whether they get more worried. All right, let's talk about Carvana, Pete, because this one in January was $44 a share. Look it up. Look at where it is today. I mean, the stock has just been exploding to the upside, moving up very strong. Basically, second quarter profit, and it was a profit, 14 cents a share. Was supposed to post another loss. And that's why this one's up so strong, I think, Pete, because revenue was $3.4 billion, a lot better than the company had projected. So strong report all the way around for Carvana. And I think a lot of people got caught on the wrong side of this one since January.
Yeah, you want to see somebody else who crushed it outside of Meta. Everything we've heard about automobiles, I'm not talking about used, I'm just saying in general, the makers, the Fords, the GMs, and everybody, there's always been something that you could point to say, well, there's a negative. There's nothing at all in this Carvana delivery, John, that didn't look fantastic. They did it better than expected by a lot when it comes to the earnings. They did better than expected by quite a bit when it comes to the revenue. The sales were awesome. Those numbers were incredible. A matter of fact, their vehicle sales were, I think, over 100,000 units or something like that. Unbelievable. Oh, and there is a little bit of a short interest here that might be adding to this squeeze to the upside. Stock last I looked was up about 11%, John. It hit a 52-week high today of 153. And I think I heard you say it was trading in the $40 range, somewhere in there in January. I'd say this thing's doing pretty well.
Well, I'd say better than pretty well. That's really strong revenue numbers there. And, this is, of course, a coast to coast seller of automobiles. So you get a little bit from all of the states. It's not just the South or the East or whatever. All right, let's talk about Moderna, Pete, because ever since the pandemic ended, this one has struggled. And Moderna today down 18% or more. Second quarter, the revenue, the sales numbers, better than expected. But you know what? The loss per share, Pete, and again, you have to kind of question what the heck's going on in this thing. The loss was 333 a share. That's a huge loss and worse than expected. They were expected to lose 314, even though they're bringing in $240 million worth of rev. So I know the CEO had paid himself very well in the past, Pete. And I don't know that it's very deserved given the numbers that they're putting up right now.
Right. He raised the expenses. They lowered their guidance for sales. I mean, across the board here, John, you're just looking, going, okay, you beat on revenue, but all right, what about everything else? And unfortunately, you look at just about everything else, and you brought up the earnings of losing 333. I mean, holy smokes! You know what their cash burn is? Their cash burn now is about $2 billion. This is a company that all of us got more and more familiar with, obviously during the pandemic. And that's another one of the challenges that they've got, because they're struggling in the vaccine world, that they, in the midst of COVID and the marketing and everything else that goes along with it. This is one of those where when you look at the actual numbers, the financial numbers look pretty good. But when you look at what they're doing and what they've done over the last few quarters, John, it's not been very impressive. They're struggling, it seems like, in a big way. I don't like seeing the cash burn at the levels that it is, because at some point, that's going to start digging into the rest of the financials in a big way. I think this is one of those stocks at 97 bucks. It's been as high as 170. I would say, you know what? Keep an eye on it, but it is not time, just because of the fact they're under 100 bucks. It's not time to buy it. I think they've got too many issues right now.
They certainly seem like they've struggled. And like you said, Pete, R&D spending $4.5 billion. That's an annual number. But man, like you said, cash burn of $2 billion. There's a lot of things not to like about this stock right about now. All right, let's talk about Toyota Motors, because surprisingly, since I see these cars everywhere, Pete, I mean, it's not just in the United States, down in Puerto Rico, this is the most popular brand because parts ubiquitous, meaning everywhere. And that's pretty much the case throughout the planet. Wherever you are, you see an awful lot of Toyotas because they've done a great job getting repair facilities and parts in all parts of the world, really. Well, the stock reverses down today and trades down to about 180 a share. Revenue was up, but that was, a lot of people attributed it to a weak yen, Pete. So vehicle sales volume declined sharply. And that's not good for Toyota right here. Its home country, of course, is Japan. I think you all know that. But nonetheless, it's trading double the volume it normally trades here in our market, the ADR is. And Toyota announcing an interim dividend, but refrained from providing future dividend payments information. So I think there's a lot to, again, just like Moderna, a lot to kind of scratch your head about and say, not now.
Yeah. There's been pressure on the stock. It's been as high as 255. Here it is at 182. It's down about 6% or thereabouts. The vehicle sales volumes, John, that declined. That is surprising. That's not something that normally a Toyota really would put out there. You know, on top of all the other numbers that you had on there, John, and I think all of them are important. How about the fact that they've had these production issues and they've got recalls? And this is not the Toyota way. And unfortunately, it is what they've done in the last quarter. And that's going to be a problem. I think that's going to hang on them for a little while. With a range of 160 to 255 and it's trading 182, I would say this is one of those names over the next couple of weeks. We might see it actually bottom out somewhere a lot closer to that 52-week low then it might be kind of interesting. But otherwise, I don't think this is one of those names, at least right now, that you're going to want to chase.
Yeah, it just seems like these last two stocks, Pete, Moderna and Toyota, have a little too much hair on them, as they say. All right, let's talk some sports, Pete. But before we do, let's take a look at one of your favorite coaches, Campbell, up there in Detroit. He was looking at, Pete, one of his players, and I know you know the family and the player, but this kid's got the heart of a lion. And it was a game that they were going to lose, but he didn't want to come out. And he wanted to just go after some guys, and he did. So let's listen to Campbell describe that.
This, to me, embodies everything that St. Brown is about, because we're getting our teeth kicked in at the end of the game.
He's my favorite.
Out of the game, and he wants us to run the ball so he can freaking block, even though there's no way we're going to win that game at that point. Watch this fucker. All right? Watch this fucker. We're going to run it 3 times. End of the game.
Watch this fucker.
That means something. Here's the next one.
23 wasn't having any of it, so was he, Pete?
Life's great. You know what? You're not going to have a good time. You're not going to have a good time. He's out for fucking blood. Because the rest of those guys
He's out for blood.
This, have fun. But somebody's going to fucking get it. Come on. Down here. All right, here we go. Last blood. Watch this. Fuck you. Fuck you.
The kid's a competitor. The kid is a competitor.
That's fucking hard right there. This
Yep.
to me embodies everything.
Campbell likes that. He likes that fighting spirit. He is not one of those guys that likes that these guys don't hit as much and all the rest. But I think the players really love him, Pete.
I think you're right. I mean, what's not to love? I mean, you got a coach who's already been there. He's been there, done that. And now they're playing for this guy who, when he started off, and it got a lot of people were very, very negative about the fact that he wanted people to bite kneecaps and all the rest of the stuff that he said. But the reality is, I think that the players think the world of this guy. They all want to play for him. There's a reason that you've got a guy who's a wide receiver who, in a game that doesn't matter anymore, still wants to be on the field, still wants to do everything because it's the Dan Campbell way. They're aggressive. They go after people, and they're nothing cheap shots. That's not part of it. I'm just saying that they're aggressive and they're physical. And that kid is jacked out of his mind. Anybody who saw Receiver on Netflix would know this is a great kid, comes from a really disciplined family. The dad is a pretty hard ass kind of a guy, and his kids are pretty good. You got one of them in Chicago that's not so bad either, John. So that's pretty cool. By the way, I was taking a quick look because I knew, but I wanted to check. They beat Kansas City game 1 last year, Super Bowl champs. They beat the Rams in the playoffs. They beat Tampa in the playoffs. And they went toe-to-toe with San Francisco, who arguably was the best team in the NFC, and they proved it by getting to the Super Bowl. But they gave them a hell of a game, John. They're this close in Detroit from getting back to a Super Bowl, I think. So we'll see how it goes, but the mentality that he brings to the game is something really, really special, and I think those players love playing for this guy.
Yep, there's no doubt. And Campbell, you and I should go up to a game in Detroit, I guess, Pete.
We should.
Yeah, it would be fun. And that is a loud stadium, man. You know, ever since they built the Silver Dome back in the day, which was loud, this one, Ford Field, louder. And those fans just love it. And they love that coach, too. Although they probably question that call in the San Francisco game, Pete, in the playoffs.
Yeah. It's just who he is, you know. I mean, that's the one thing I would defend him on is it's not like he just did that in that game and that was a mistake. Those are the kinds of calls that he made throughout the season as a coach or whatever. And so the players get to know it. And it's very similar to a lot of other coaches, you know, where maybe it's questionable, but that's who they were all year. And that's the way they wanted to go out. It just didn't work. If it worked, all of a sudden he's a genius, right? I mean, all of a sudden, holy smokes, that guy's unreal. John, I wanted to do one other thing that we did the other day that breaks down just one of the NFC and AFC in the South. And who do we think is going to be the winner? So here's what I got for you. Indianapolis, they've got Anthony Richardson, but the guy only had 4 games last year, so he's almost like a rookie coming in again. He's athletic. He's big. He's a heck of a quarterback. I think they're going to be good. I think Jacksonville's going to be even better because I think that they added just enough. Trevor Lawrence is doing a great job, but he throws too many interceptions, and that's something that he's going to have to get away from. He's done it 2 of the 3 years, just too many interceptions. It's not going to work. Tennessee, it's a really good football team, but they've got to get more offense. They weren't able to score the ball very well this past year. You know who's going to win that? It's going to be Houston. They're really well coached. They've got a great quarterback, and everything that they did in the draft to make their defense better the year before, last year, they did it again this year. They're adding even more to that defense. So check mark on quarterback, check mark on wide receivers, check mark on defense. I think Houston's going to be pretty damn good. And then on the NFC South side, you've got Atlanta with Kirk Cousins. He'll make them better, I think. New Orleans had a great draft, but I don't think that they're quite there yet. Carolina's terrible, so let's not even worry about that. I like my old Buccaneers, John. You know, every day of my life, I've got a Buccaneer right around my neck. There it is right there. Absolutely love what they did. And I'll tell you what, Baker Mayfield, for all of the headaches that he either has developed for people or the people that dislike him to the point where they just hate him, that kid's actually starting to show that he's a real NFL quarterback. And when you combine that with the defense and you combine that with an offensive lineman who was just paid an ungodly amount of money, the kid from Iowa, the great big tackle, I think that team is ready to kind of go to the next level. Last year they stumbled with Detroit. If they play against each other again, I don't even know. Predictive wise, I don't know. I think maybe Detroit, but Tampa's going to be right there.
Tampa will be, Pete. Atlanta is going to, that's potentially going to be a really good team this year. Of course, they showed flashes of it, but they were short in a few positions. They've strengthened those.
Quarterback.
We'll have to see, Kirk Cousins, of course. Is he good? Are he and Aaron Rodgers going to be able to overcome those 2 injuries? Because a lot of people will say that those injuries, and Kurt suffered his later in the year than Aaron did. Aaron's was on the 4th play of the game in the first game. But a lot of people think that injury used to be like an 18-month recovery, not a 12-month, not a 1-year thing. But they've both undergone, I think, a lot of treatments that weren't available to prior players. But I think you're right. I like Houston. I like Miami's chances, Pete. I know they're not in the South. They're in AFC East, but I like their chances. And I would not overlook, and I know you're not, but I wouldn't overlook Baltimore because nobody wants to play them. Nobody.
Right. Nope.
Like
that defense is unreal. The quarterback is unbelievable, and Derrick Henry's not such a bad running back to have either.
Yep, that's like Detroit. You go into that game, you know you're going to be banged up for a week. Dan Campbell, man, I loved that. I think he is indeed, as you said, Pete, I think he's the man. And really look forward to what he's going to do with that team this year. And I think they're just going to build on it, Pete. So I agree with you. I think San Francisco, no slouch, but if they have to leave San Francisco and play in Detroit, I think it's going to be very, very tough on anybody that has to play in Detroit. I think the Super Bowl might run through Detroit this year, Pete, not San Francisco. We'll see. We'll see. All right.
Yeah.
Well, thanks, folks. As you know, we do the Rebels Edge Monday, Tuesday, Wednesday, and Thursday. Yesterday we couldn't because we were traveling. Pete and I are out here at the Money Show and Traders Expo, keynoting tonight at 4:30. So if you're in the vicinity of the Paris Hotel and Casino, come on by, buy Pete a beer or whatever. And we will see you on Monday. Have a great one, everybody. 1 p.m. Monday.